G'day folks, welcome back to Pete's Investing. It's February 28, 2024. This is the German DAX update. All timelines are showing bullish trends, so just be careful about going long. There is a bearish divergence still, again, on all time frames, on the weekly, the daily and the hourly, so just be careful about going long. We're also including a new indicator. You can access that at the end of the video with the links in the description below, which identifies tops and bottoms. Plus, I'll be including a trading idea with the rules at the end of the video, so stay online. So this is the German DAX. We've got the weekly, daily and hourly for those new to the channel. Down here we've got the ADX 25 on the weekly, which identifies it as a bullish trend, on the daily likewise, and on the hourly likewise. On the CCI 150, we had a couple of bearish divergence. That's our divergence indicator. You can see there on both of those instances, the price fell off, and we're currently on the weekly still in a bearish divergence. So long as that high on the CCI remains lower than that point there and the price keeps rising, we're going to consider that a divergence. At the moment, they're still in play. If that CCI keeps rising and goes higher than that point, then it will invalidate the divergence. The same rule applies for the daily and the hourly. You can see there on the daily, still a bearish divergence versus new highs, higher highs on the price, and on the hourly, likewise, a very steep divergence on the CCI versus higher highs on the price there. We've also got these, you can notice these arrows. Let me just zoom out onto one of these charts. I'll go into the hourly chart. I've got these red arrows at the peaks here, and these blue arrows at the bottoms, and they help identify the tops and bottoms. And again, the link to that video is in the description below, so to understand how to program those arrows and how to identify them. But basically at the moment it's showing peaks on all these areas where it potentially would have fallen off, as it doesn't, as you can see, it doesn't always work. What I like to use is if that started showing some red arrows up there as well, then we consider that possibly a start of a downtrend. Now you can see there it did fall off in each of these cases. Some of these areas did not identify red arrows, and it does likewise the blue arrows identify a trough. So just be mindful of that, and that's always a possibility. In this point, there's showing some false moves to the downside, although again, just be mindful of this bearish divergence. So the basic rule is, again, using the Heikin-Ashi on the price chart. When the Heikin-Ashis turn green, this is one of the parameters. When the Heikin-Ashi turns green, you go long. And when the Heikin-Ashi turns red, you go short. So if I zoom out in conjunction with the daily chart, so what I've got here is the daily chart, the hourly chart using the average down approach, and the hourly chart using the stop loss approach. So again, I'm just giving you some ideas on how to trade using various methods, and this is one method only. So again, when you can see there on the daily chart, only trade on the lower time frames in the direction of the CCI 150. So if the CCI breaks above these moving averages, again, these moving averages are contained in the links with the description below with the video that describe how to program those. When the CCI 150 breaks above the moving averages, you can see there on the right side of the charts, the hourly charts, you would have gone long at that point on the average down, and that point on the stop loss strategy. So you can see there the average down strategy in this case on the DAX for the 1 hour chart generated 814, and the stop loss strategy generated 285. So not too bad on both of those. And what I've got in here on going short, so had you gone short when you can see there when the CCI break below the moving averages, and again you can see the starting point on the right charts, you would have gone short during these periods, and you would have stopped going short when the CCI broke into that range of moving averages. So you would have stopped at that point there and not taken any long or short trades on the average down approach. And again, on the stop loss approach, you would have stopped taking trades there. So you can see there in that area there. So basically, had you stopped taking trades at that point, the average down approach generated 3,289, and on the stop loss approach, you'd be down about almost $200 from if your starting balance was 100,000. So just giving you a couple of ideas how to trade those. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. hit that like and subscribe button, hit that notification bell, and we'll see you in a future video.